All right. Welcome back, guys. Welcome to the show. Let's have a look and see what's going on. Let's see. Let me try and get the live chat active. If you're here on the chats, say hi. Don't be shy. And it rhymes, right? If you're new to the channel, guys, I talk about all sorts of crypto stuff. And yesterday I had a whole bunch of questions, especially one specific one that came, which was really interesting. And this is what this is. So somebody asked me yesterday, they're like, okay, what type of technical indicators are there? What's the categories, right? They wanted to know. And I thought that was a brilliant question. So I thought, you know what? I'm going to go out there. I'm going to go make something for you. So what I did is awesome. So what you're seeing on the actual screen right now, this is the thumbnail anyway, everything you need to understand about charts for dummies, right? So we're going to do this, but let's get rid of this for now because this is just going to go on a loop, right? Let's get rid of this. Right, let's talk about Bitcoin and everything. At the end, we'll talk about how you can use certain technical indicators and what are the major technical indicators that you should be using and what's the advice is. So what I did was I went around, scoured around the internet, found a whole bunch of stuff, connected them together, made a lovely little PDF for you guys, right? So you're going to love it. Yeah, you can actually download this at the end. So let's talk about crypto and see exactly what crypto has been doing. These are the old charts. Actually, let's go to our one of our old charts here. So let's have a look. And you can see we're very close to this 27th of August, which we know is going to be the actual options expiry date. And we know on that specific date, we're going to have massive action, usually before or after. So I'm quite happy. So I was talking to someone yesterday. I did leave them a message. They actually sent me something on YouTube. And they said, how low do you think you're going to go, basically, right? They asked. All right, thank you, bro. MDS. Do I know you, bro? Are you on one of the groups or something? That would be awesome. If just let me know if you are in the groups. And also, if you have any questions, bro, please do ask me here. I'll definitely talk about it. No worries, okay? Any questions, I'll talk about it. Right, so one of the things that we were looking at, so where was I? I just kind of lost my thing. This is what happens when you're not scripted. Okay, yes, we're talking about the 27th, right? So on the 27th, right, we're expecting a dump. Now, what I said to this person on YouTube, I replied back to them and I said, basically, he was asking how low can we go? And I said, well, actually, this is quite cool. This happening now is very cool. And you can see, if you look at history, whenever we dump, right, whenever we keep on dumping, or if we pump, so basically what we see is before this day, if we pump, and on the day if we pump, then we guarantee the dump. However, sometimes what happens, right, what you notice is if we start dumping just before this date, right, then we pump, right? So we can see either if we pumped, then we would have dumped, and if we dumped, then we actually start pumping, if that makes any sense, right? So what we're looking at is this particular area, and I'm seeing this is a dump, and I'm like, dumping, I'm happy. This makes me happy because that means that if we do start coming down, and what we're looking for is if we start coming down, even today, if we're bearish and we come down to this line, then after this, we're going up. You see what I mean? So this, I was quite happy with this. I was like, wow, okay, this looks awesome, right? When I'm looking at all of this data, this looks fantastic. And you can see this is yesterday's chart. We didn't even update it. It's still got the kind of forecast on it, right? So let's get rid of the forecast. And let's have a look at where we can actually be, and let's look closely to what's going on. So we can see short term, long term. Actually, I'll do another chart for you, unless you want it on this one, let me know. Actually, I'll do it on this one anyway, it doesn't matter. Right, let's do this, right? Let's do this on this particular zone here. So we've got a lovely area here. We can use this as a short term, right? And you can see we bounced exactly on the Fibonacci. You just can't miss this, like Fibonacci. Depends on what time scale as well you put it. Some people like to put it here, some people like to do it here. I like to do the bodies, right? For me, whenever I'm looking for the body, I always look for these areas here. I use the line chart, and I want to get my accurate data. I want to get the exact data to tell me what's going on. So I use this. So this is the short term, but I did talk about a long term, and I said, look, guys, if you actually take this particular zone here and then take this particular zone, you can see where the 618 Fibonacci's come and land, right? So the 618 actually lands at around $42,000. But again, sometimes you just don't use all of this, and you're going to see all of the data at the end of the show. I will put the slideshow and show you. So sometimes what you got to do is also look for your trend, right? So this is a trend, and you can see the trend line that we have, it comes to here. right? So we look at this. Also, you can see this was another trend forming here, which we actually saw. So we can also use this data as well. So that, you know, sometimes you got to mix and match and find the best that suits you. It's not, everything's not exactly on the dot, right? But it is mathematical, right? So we know that something that goes up a certain amount will come down a certain amount. And I'll show you all of this stuff on another chart very soon, right? Just in a second. So here you can see how we're still within this particular range, right? And we're coming towards the bottom. I mean, if we bounce up from here and come back and test this, absolutely fine. But this is just going to be a test. I doubt we're going to break this. However, we're probably more likely to actually come down, because remember what I was talking about, volume, right? And when you look in the bottom, you can see the volume, you know, when we were slightly bearish, we had more volume here, right? And the volume just hasn't really overtaken this. It has to overpower this in order to go above, right? But so far looking good. I mean, last 4 hours, this is on an hourly, last 4 hours, it's been okay, steady, going up. But am I going to use this as a actual data point? I don't think so. I mean, if I was to use it, I could use this, right? Use this and say, well, this is the kind of the pattern we have, which is a triangle. As you can see, it's a descending triangle. We can have this pattern, and then if we put another line here, for example, so put a line here, we can use this and say, well, this could be a scenario where we could break out or we could break down, and I'll show you on another chart very soon. But then I see another pattern here which is slightly different, which is this one here, a lot more steeper, giving us a closer time frame to a breakout, and we could possibly do that. And again, I'll show you that on another chart, right? A cleaner chart, so you'll understand what's going on. So yeah, we could see a breakout, but what's the other side of a breakout, right? A breakdown. So we're going to see all of those things. What is this? This was the dominance. We don't need dominance right now. We don't need to understand dominance. So let's go back onto this chart. No, this chart, sorry. I made this chart for you, right? So let's make this chart. Let's have a look and see what we see, right? So what I'm going to do is leave the right side for now. We're going to look at this on a daily and a 4 hourly or even an hourly time frame and see exactly what's going on. So number one, let's get rid of this Fibonacci. We don't need this Fibonacci anymore. Right, let's get rid of the Fibonacci. Let's also get rid of this particular thing here. And I'm going to redraw all of this for you so you'll understand exactly what I'm seeing here right now. Also, I'm going to get rid of this one line here for right now. So what I'm seeing here is an ascending triangle, right? So number one, I saw an ascending triangle pattern. That's what you're seeing here in this colored box here. That's why I've left it colored for you. Number two, what we're seeing is basically an ascending wedge. Right, so this is ascending wedge, which is always bearish, right? We saw this, right? An ascending wedge will always break down. So we see this. Okay, so we've got two data points now. We've got a triangle and we've got a wedge. So we can see this. So how do each one of them play is the question, right? So number one, if you look at a triangle, right, and this is how a triangle would play out. So you look for the lowest point, like, you know, wherever the point was to the high, and you measure this. This is what I did here. And then you just put it down here and say, what happens if it breaks down, right? How far can we go? And this is how you kind of see your worst case and your best case scenario, your short term and your long term, because we were talking about short and long term. And then obviously when we drew this, the wedge, right, we just drew the wedge here, just put a wedge here, like, you know, so we can see that we've got this ascending wedge here. We take this area and we say, okay, we look for, again, the bottom and the top of that range, and whatever the level is, that's what we're going to be breaking up or breaking down. So we can put this down here. So now that we're slightly bearish, like where the trend is slightly down on a daily time frame and a couple of hourly time frame, we can use this method and say, well, what's the worst case scenario? So the worst case scenario is giving us a $39,000, right? Not like this is a short term, right? So the short term $39,000, closer to the 40, right? None of this is 100%, by the way, guys. So this is just an average, just kind of following the trend, nothing more. But you'll see the magic here. And you see the worst case scenario brings us to this particular range here, which gives us a 27K, all right? 27,800. So you can call it 28 if you want, right? So that's what we see. Now, what's the best side of all of this, right? So the best part of all of this is usually when this happens, we also have a pattern that moves upwards, right? So we also have a pattern that moves upwards. So if we were actually going to get bounce off here and come back and test this line, and we do a breakout, and this is what we're looking at, a breakout trade. Well, a breakout trade here would give us a 63, right? It would give us a 63 on this particular level. Is it 63? Yeah, 63 on this level. And same again, if we were to break this triangle, so we see two patterns, remember. One pattern is a triangle, one is an ascending wedge. but the other one gives us a $72,000. You see what I mean? So we have two specific patterns playing out here. This is the bull case scenario, this is the bear case scenario. But remember, as long as the momentum is up, and this is up, we're fine. And the only way we invalidate this momentum is actually quite simple, is well defined as well. And I'll show you what I mean, right? So you take this, actually, let's not use this one. Let's use something else, right? Let's use this. Let's just use this. So you take this level, right? You can take this measurement tool, draw the full range here. Where is it? You draw the full range here, you put this here, and you look for an invalidation point. And guess what the invalidation point is? The 50% mark. So if we go anywhere below the $38,000, we invalidate it, right? So that's what you look at. That's how we do technical analysis at the same time, like just using measurement tools and everything. Nothing too technical here, right? Very simple, easy to do without too many technicals. We know that this is what we're going on. If we were to invalidate this, if we come to the $38,000, we invalidate it. So far, the 39 is not an invalidation point. And also now, if we take this back to our daily here, and we look at this $39,000, where is it? Well, if you look carefully, this is today. So this line here is today. That line is, this line is today. And look at the confluence. Look at this confirmation, 39,873 on the dot here. And I'll put a line just to kind of show you. So this is the candle. If you put it here, look at this $39,000 here, and you can also see this playing out exactly here as well, 39,200 here. So there's a bit of a difference. But when you're talking about Bitcoin at $40,000 or $48,000 right now, you know, a couple $100 here and there is a very small percentage difference, right? So that's what we're looking at. But that, as I said, it's not 100%. So this is what we've done here, as you can see, right? So this is what we got. Now we want to basically say, okay, you know, let's actually, I'll leave this for now so you can see what's going on. So what we do when we start using this, and we say, okay, the trend is up. So what is going to be the steps, right? How are we going to move up, right? So we start drawing these fibs, and you'll understand what this diagonal line means as well. I'll draw it all over again for you, right? So I'm going to draw 3 boxes here, nothing more, 3 boxes. And why I'm going to draw 3 boxes? Very simple. I have 1, 2, 3. You see what I mean? 1, 2, 3. That's what I'm drawing, right? So I'm going to use the bodies of the candles to do a projection. So I'm going to say, right, projection short term, we could go to 52 if we break out, right? So we're taking small steps. Projection number 2, we take the same level, same bodies, right? And we say projection number 2, we say, right, we're going to come to this 50% mark, which is bang on this line as well, which gives us a $56,000. And I'll show you these numbers, how they kind of all confirm everything as well. And we've had them on the chart for some time now, right? And then we've got this level here, which confirms a $61,000. And I'll just leave it there for now, right? So let's go back into the chart and show you some levels that we were actually already looking at on a daily. Let's go in and let's show you, right? So first box here, this box here, right? Let me just show you this box. See, let me tap it, then the price will come up. You see here, we've got 55,855, right? Kind of similar to our box, right? Isn't it? You know what I mean? Because we said 56 on the other one, it drew 56, and this one is showing a 55,800, close to 56. We said 61. This one is showing us a 64,300 and something. Do you know what I mean? So ultimately, all of these things come up. And funnily enough, right, I didn't show you. So if I was to do this, you see this line here is closer to 61 because it's $63,000. So again, we can use these datas. And remember, this is something I just done now, but this is something we've had for weeks, if not months, right? This one we've had for weeks, if not months. And all the ranges and the boxes and everything are drawn here, right? Every single level, like even this one here, we had, was it this one or the other one? It was the other one, right? Every single range here was actually already drawn. We're not 100%, but kind of close enough, right? So I just thought I'd show you this because this line, remember, I never took it off because it is still valid. I've mentioned it's still valid, and everything seems to be kind of playing out as it should. Now you probably want to know what's the short-term dip, right? Low prices, because we're acting bullish. Why are we acting bullish? And I've actually mentioned this yesterday. I said bull trend. I didn't mention bull market. You see, a bull market is when you're doing all these ultimate highs and everything. This is just a bull trend. we're not in a bull market unless we go above this or even go above this level. You see what I mean, right? So you got to have a clear, conscious mind and say, well, understand the difference. This is not a bull market. This is a bull trend, right? When we're moving up, it's just a trend, nothing else. This is not a bull market. As long as we stay below this price, we're not in a bull market. We're not running upwards. You know what I mean? So that's what you got to understand. You know, when we entered an official bull market, for example, in 2020, right, we entered when we broke this previous high. You see what I mean? So every time, it doesn't matter how low it was. So for example, compared to 2017, it was low, but that doesn't matter, right? As long as we break, so we in the next cycle we go above this, then we're in a bull market. You see what I mean? So when we break this, we go in a bull market. Just because we went above this was a previous high, but this was when we broke the bull, when we started the bull market. So the same thing applies here. For us to start the bull market again, you need to know the difference is we have to, let's get this here. We have to go above this, the previous high, or the current, like, you know, we need to break this 64 in order for us to say it's a bull market again. This is not a bull market. This is just a bull trend. And a bull trend can easily flip. So, you know, when you have that mindset, you'll understand, and you'll be a lot more calm and patient, and you'll understand exactly what's going on. Right, so let's go back into what we were going to do about what the short, near-term scenario is for the market. So near-term scenario, we can look at this particular data and we can say, right, what's the current low we can expect? And on this particular level, new update is 46,451. We can expect that. If we were to use a midterm and say, right, okay, we might actually go into a few weeks, then we can use this particular data and say, well, we might go back to the 42. And you see how all of this matches what we're doing over there as well. So this is impossible for the Fibonacci's to know that this is our trend line. You see what I mean? And it's actually following these levels, right? So coming back here, you've got this, and then the worst case scenario, that means like, oh guys, that's it, you know, this was all a fake out, you know, it was just a complete fake out. We're going back to nowhere, basically. Sorry, one second, let me get rid of this. And that's the worst case scenario. You take this data and you say the worst case scenario, you put it here, and the worst case scenario would bring you to a $37,000 BTC. $30,000 BTC. And if you look at this, remember the invalidation point was the 38. So that then takes us into a bear market, right? You know what I mean? So we start becoming all bearish. And when we look at this, what kind of patterns do we see, right? We need to understand this. So far, we're seeing this pattern here, right? We're seeing this, right? It's playing this, which is good. This is more like your ABCD 1, 2, 3, 4, 5 pattern, right? So we're playing this, which is absolutely fine. But if we start coming down and we start doing these tests, right? And then, you know, kind of doing these little fake outs or whatever you want to call it, and we come down here, for example, well, ultimately, we're, you know, if we come to this line, then we're going down even further. You know what I mean? So what we don't want to do is have any of this kind of a situation, right? We want to be moving up, and we want to hold support here and move up. So sometimes we need to obviously activate our candles as well, just in case. But ultimately, if you do use the line chart, remember, it will give you the cleanest data, right? Cleanest data. For us, the strongest support I can personally see right now, and if I was to put a Fibonacci, so just a normal line, this location here. So you see how we got this as a support, this as a major support. So you see how we had this massive 20-30% dump here, and we held this as major support. That is the major support, right? You know, we can use this, and you can see this data coincides with this area as well. So this is a major support line for us. So in the, you know, in the realistic term, we're looking at a 44,800. I'll call it 45 just for the sake of it, right? But that's what we're looking at. This definitely, this area here is going to be a major support for us, right? If we can hold this, then yeah, the bull market continues. So the pattern I would be personally looking for on the short term is this, and then probably break out, come back and confirm this, and then move forward, right? That's what we're looking for. Like, you know, any direction doesn't matter. That's what we're looking for. So just stay calm, just observe, you know, as long as we don't, as I said, as long as we don't go back to this $38,000 level, we're still in a bull trend, right? You know what I mean? We're still in a bull trend. Hope that kind of makes sense to you. So that's that. Let's have a look at Ethereum. By the way, guys, if you have any coins you want to talk about, let me know. Ethereum, this is the dominance, right? And we're expecting the dominance to start moving up, ascending triangle. You know, I'm just hoping this, basically we can break this line. So I'm not looking at the bearish scenario, I'm just looking at the bull scenario. I mean, bearish scenario, we do know that this week, right, ending on Friday or something, we are going to see a lovely little dump. It's fine. That's not an issue. You know what? I am betting that weekend we might see some massive action, which might bring everything back up again. Also, I did draw something else here, so I just realized when I looked at the other one, I did draw something else here. Let me draw that again for you, because I don't want you guys to say, well, you drew something and then you took it off. No, I didn't take it off. What I was doing was basically I did a thing here, so we can see this sideways action. So I was looking at this area here, and what I did was I did a little sideways action, and I was like, okay, what happens if this goes sideways, similar to what Ethereum is doing? Because you know Ethereum has a bull flag. This was a flag, right? This is a flag pole, and this is a flag. You can see I've colored it for you. In fact, I'll change the color to make it a little bit more vibrant. And give me a second. Let's make it a little bit more vibrant, and let's make it more darker as well. So you can see exactly what a bull flag looks like, right? And I have actually shown how this bull flag should be drawn on a previous video. So you can see this is a bull flag, and Ethereum's been flashing this. And usually when we have this on and also we've got is the L8 wave here as well. And I'll put it on a white for now, so you can see how we've got the low to high, and then to the low, and then we're going to basically break out. We can use this data to project that how high we can go, and also the high that we did see based on this bull flag is this particular area, which is showing at 4,993 and almost a $5,000 Ethereum. So we know this breakout is going to be very powerful, right? It's going to go above the all-time high, right? When it shoots, it's going to shoot above the all-time high, because remember the previous all-time high that we had was 4,400, right? And now we're going to shoot straight for that 5K, right? We're going to be closer to that psychological barrier that we have, because remember, there's nothing here holding it back to get to 5K. Once we break this, that's what we're looking for. And you can see this is also forming here, right? So when I was looking at this area, let me change the color for you, so just so you can get reference, like point of reference, like it's similar. You see this area here, and when you look at this area here, it's not a bull flag, but it is trending up. And this, the zone, as long as we can hold this zone, we should see a lovely breakout. The pattern I'm looking for is like come down here, bounce around a bit, and then shoot up, right? But only if Ethereum does it. You see what I mean? So we're following Ethereum as a leader now. We're saying if Ethereum plays this pattern, then BTC will also do the same pattern. Do you know what I mean? So either one of them could lead. And I've talked about it many times in recent videos. Is that, guys, all you have to do is just follow the market, follow these two, all right? Just look at what they're doing, and then everything else is going to be solid for you. So remember, when everything was pumping, I was like, guys, this doesn't look right. I don't see anything right here, because Ethereum wasn't doing anything. All these moves that BTC was doing, Ethereum was just stagnant, right? When we looked at Ethereum, we saw Ethereum did not break out of range. You know what I mean? So this is what we're looking at. We just want Ethereum to just pump, but ultimately we still got a few more days. So let's wait until, obviously the dump is happening on Friday, but I'm going to wait until Sunday to see what happens, because Sunday week close is going to be awesome. Also, talking about week close, my God. Also, look at this, guys. Let's get rid of the drawings. This is awesome. You see what I mean? 1, 2, 3, 4, 5. 1 red. Fantastic. You see, not many people are going to see it that way. I do. This is fantastic. On top of that, look at this, right? This $46,500 level is a beautiful support zone. As long as we can stay above this, we've got a higher low, which is perfect. And so far, it seems very balanced, right? So we haven't seen that major dump that we're looking for that could take us down and bring us down here. Do you know what I mean? And ultimately, the way I'm looking at this is a higher low than all of this crap here. Do you know what I mean? And that's what we want. We want a lovely little low here, give the market a little breather, and then basically start shooting upwards, right? So then we can start creating new higher highs, right? Right now, we needed this. This was a breather for us. Everything was indicating that we need this. So I'm really happy with this. This is cool. This will kind of reset the market and get it ready get it ready for a nice little pump like this. You see what I mean? We need these reds. Every now and then we need these little reds. If we don't get a red, then we don't know what we're doing. Now that I have a red, I can then reset the charts and say, well, that's what I'm expecting. This is why I'm forecasting it in this particular way. Where is it? In this particular way, where actually it is this one, where I'm saying basically we could come down, bounce, and then shoot, right? That's what we're looking at, because it's a forecast, right? That's how we're going to forecast this. So far everything looking awesome. Yeah, I don't, again, my chat is keep on bugging out. I have no idea what's going on in the chat. Let's see if I can see anything, if there's any questions or anything. No, there isn't any questions, so that's awesome. But let's go into the what do you call this, the little thing I was going to show you, right? There's this special thing I wanted to show you. So I'm not going to talk about anything else today. I mean, if you want to have a little look at this stuff here, for example, doesn't really make a difference. I mean, of course it's going to go into USD because people are hedging, so they can buy this dump basically. So they're going to pump the USD, put more, sell the BTC Ethereum, put it into USD. So of course it's going to show big today, nothing else, right? Market cap, obviously you can look at this, and I've been very concerned about these volumes, remember. And if you look carefully, $122 billion, a lot of liquidations happened here, and I can show you the liquidations as well, actually. All right, if we just look at the liquidations, you can see that this was like a bull trap, as I've mentioned, right? Where look, this green is, if you look at the color, you can see the green and red, right? You can see how the bulls just got wiped out. And if you look at carefully, $339 million worth of liquidations for bulls and 78 compared to that for bears, right? So this bulls just got wiped out. It's just over leveraged, too confident, too cocky, not thinking, not taking count of the dates that we've got here. We've got dates here, for God's sake. If you know there's a date there marked already on a chart all the way to December, what's wrong with you? You don't trade around this week, right? You start a trade after you see what the market does, then start the trade. You know what I mean? So that's what it is. Now let's move you over to the thing, and I know you guys are probably getting bored, so let's open up this for you. This is what it is. So I've titled it Everything You Need to Understand, Charts for Dummies. Now this is only going to show you technical indicators, one of the major technical indicators, and it's a PDF, so you can actually read it in your own time, save it, do whatever you want. And this explains the types of technical indicators, right? So you can see when I talk about maths, a technical indicator is a mathematical calculation that can be applied to stocks past patterns. So obviously Bitcoin's not a stock, but it's a similar thing. We trade the same way, like prices, volume, or even another technical indicator, right? And you can read all of this. Technical indicators do not analyze any part of the fundamental business. So you see what I mean? So technical indicator is not going to show you what the Bitcoin logarithmic chart is going to show you, because that's a fundamental indicator. Do you know what I mean? So when we activate the fundamental indicator, so let's get rid of this. All right, when we activate this, right, this is a fundamental indicator. This will not show you anything else. All right, this is based on fundamental. Fundamental is this 21 million coins, 18.795 something 100,000 coins are already mined, so we know there's a big supply shock. The less the supply, the more the value. So that's a fundamental. Do you see what I mean? So we need to understand this kind of stuff, like, okay, what's the difference between a fundamental? So that's what it is, right? Revenue profit margin. So here you can see how it works, right? So how do we use this, right? We use it to alert, to predict, to confirm, right? This is what we do, right? But read some of these in between the lines, I'll call it, right? Technical indicators are most extremely used by active traders in the market, as they are primarily designed for analyzing short-term price movements to a long-term investor. Most technical indicators are of little value. Do you understand what that means? Most technical indicators, you do not need them. 99.9% of technical indicators, you do not need them. Okay, they're just there for God knows what, right? A rough estimate, right? That's what it is. So here you've got some tips here, basically. How do the indicators work? And remember, we talk about you don't need all the indicators. Covering more than 5 indicators is futile. It doesn't give you anything, because there are types of indicators, the major types of indicators. That's what you need to understand, right? So have a read through this, and then I've also added how what is a leading indicator and what is a lagging indicator, and you can also see the types of, right, so they're numbered, right? So the trend indicators, for example, your moving average, this is MACD, moving average, convergence, divergence, parabolic, stop and reverse, which is the support and resistance clusters. But you can actually see that I've got my own custom version of this, but you can see that this is a leading indicator. These are lagging indicators. They're only giving you yesterday's news, not today's news. They're giving you last week's news, not this week's news. Do you know what I mean? So when you do use them, don't get overexcited. When somebody's showing you this, don't get overexcited. And you can research all of this online as well, right? You know, we're looking at the second type of indicator, which is a momentum. So you got your trend, right? Trend, right? That's what you use, your trend. And then you've got your momentum indicators. This will give you all the momentum. So here you can see I use the Stochastic Rsi, you know, and I do use a combo with the RSI to show you what the RSI is showing. But ultimately this and this and this are all three the same type of indicators. When you're looking at this three, they're all the same indicators, right? So I hope you understand how these work. We're looking at volatility indicators, for example. These are the top volatility indicators, right? Again, you know, we can see true range, standard deviation, Bollinger Bands. Now, when we're talking about deviation, this is quite funny, right? You know, when we use a trend line, technically we're literally using a line version of a deviation. When we're looking at a pattern, we can actually do this, right? So also here, you've got volume indicators. I'm not that fussed with volume indicators, I'll be honest with you. On balance volume, I do check this. But then again, when I'm looking at an entire crypto sphere, I know everybody reacts together. So what I do, I just look at balance on exchange. It does help me a little bit more because we're not doing stocks. See, with the stocks, we know that there's a supply ratio, right? We know the supply value or even seasons, and we can use this. You know, balance on volume, how much is actually being traded, we can use this. But on crypto, it's a whole different wild west. So I don't personally use this, but you can use this. But this will explain to you. Also, I've written down everything as well. And obviously, guys, if you're new to the channel, subscribe, like, share, right? I don't know what you're doing, right? Hit that bell button and press all, you know, to help the channel basically. But this is what it is, and I've got a link on the description for you guys. I've got a Google Drive link with the actual PDF. Please feel free to download it and do whatever you want. But yeah, this is my combo. You see what I mean? So what I've did here is I use the RSI and the Stochastic Rsi in one indicator. So for me, this is giving you, so this is kind of the sentiment, similar to MACD and everything, giving you the sentiment, but at the same time, I'm able to see what's actually happening. So this is more like I'm using parts of it, and then I'm doing it. So as you see, if you look carefully here, right, here. The only indicator, so this is not an indicator, the logarithmic is not an indicator, remember, it's a fundamental, right? So when I'm using it, and I'll show you here, there's only volume and there's only Stochastic Rsi and the RSI. That's all I'm using, but because I'm using it on one indicator, I can show it like this, but normally it would just be Stochastic Rsi. For example, if I go to another chart, where is it? Let me show you. So I got all sorts of, here, for example, I just use a stochastic, right? That's what I'm going to use, nothing more. I don't really need too much, right? But this is how we basically use it. But ultimately, remember, your lines are the best friends that you've got. They will always give you the most accurate data. You can never go wrong with a simple line. You know what I mean? You can never go wrong. I mean, this is how we can actually see if we're going to break up or break down. And so far, as you can see, we're testing that particular line. We're testing this particular zone, and you know, if we can hold it, we're great. We might go and test the above level, right, when you look at this, but if we don't, then yeah, of course, we're coming down again. You know what I mean? We're coming down again. What's going on here? What's going on here? Got it on the wrong bloody thing again. There we are. Yep. Right, so I just reduced this down because it doesn't cover the thing. But yeah, that's what you can see. You can see the line here, and you know, if we can bounce back up again, then we might actually do the breakout. And if we did do a breakout, it would be phenomenal because it takes you to approximately towards the 63. We won't say 63 yet because we've got a lot of traffic. You know, we've got a lot of traffic we need to beat, right? And when we talk about traffic, we're talking about zones of areas where we've had a lot of support and resistance, basically. So we're looking at those areas and we're saying, look, these clusters, we've had a lot of support and resistance, and we need to beat one of all of them to basically get to where we want to get to. Do you know what I mean? So that's why we've got these boxes here. These are our resistance zones. We know that every time we enter these resistance zones, we're going to face traffic. And this is exactly what we did, guys. So I hope this was valuable, informative, and I hope you guys find the PDF helpful for you to understand, major indicators, because too many people are too concerned about indicators, right? And you don't really need it. And I've talked about it many times, right? You don't really need it. I mean, if you look at this particular chart, ignore this here, right? If you look at this chart, and by the way, this is my default setting. That's why it pops up on every chart. This is my default setting. But I'm not going to even use things. So if I do use Fibonacci's, that's for my mathematical calculation. I'll use a measuring tool. But most of it, if you look carefully, they're just lines. Every chart you look at, they're just lines. I'm just using a line to guide me. That's what I'm doing, right? Look, just a simple line gives me the pattern that I want, right? Here, for example, I can even do something even more awesome. So I'm looking at this and I'm seeing this particular level here, and I'm seeing this particular level here, and I say, oh, look at this. I got a channel. I got a ascending channel, right? You know what I mean? So I can see this just with the simple clicks, right? This is not an indicator, it's just a line. Same here, we're looking at lines, but obviously we're doing deeper by doing the bodies. And every single thing here is just a box and a line and a drawing and a Fibonacci, nothing else. Do you know what I mean? Nothing else. So please have a read through. I hope this kind of helps. But other than that, guys, nothing to expect, much to expect. We're still waiting for this 27th. Let's see how this plays out. I'm happy if we keep on dumping. So understand what I'm about to say here, right? This is the key right now. So you have to understand this. I'm happy if this keeps on coming down up to this date, because we know if it keeps on coming down up to this date, then we can start seeing a pump. You know what I mean? So I've got this funny feeling we're going to come down, and then we're going to have Saturday, Sunday, obviously, when all the institutional places are closed. And then we're going to see this Saturday, Sunday move, and we can judge that is Saturday, Sunday bullish or not. If it's not, then we can expect Monday to start being bullish. You know what I mean? So that's what's going to happen. Anybody who's going to sell on a Friday night, leave their offices or whatever, they're going to come back Monday morning. They're going to look at this. As long as this is still down here somewhere, they're going to pick it up again, because they just sold here. They're buying it for a nice little discount. They want to pick it up again, play the market again. That's what it is. Nothing goes up one way. Everything has to go in a zigzag, right? Like this, right? Everything has to go up like this, regardless whether it's up or down. And that's how we basically get ourselves a trend line, and that's how we get ourselves a pattern, and that's how we make money. And we can use, remember I talked about stochastic RSIs, right? We can use a stochastic RSI to do this, and you can see stochastic RSIs coming down. As soon as it comes down to this level here, right, just below this purple area, let me show you here. As long as this blue line comes below this area and then comes back and flips like this, how it flipped here, guys, that's it. It's off the races again. Until here, you can actually make a nice little decent bit of money. So that's what most traders do. I mean, spot traders, day traders, you name it, even leverage traders. But leverage trading right now is very, very dangerous. Anybody getting overhyped and overexcited, you're going to get wrecked. Just be careful until this 58. I'm telling you, this is why I wrote it down here. I clearly wrote it down here. I mean, look at this. This chart has been there. This date, this frame, everything has been there for some time. And look what I've said. I've said at this level, all right, and this is the top of the line. Let me show you the top of the line. There. 59,700 and sorry, 58,000 to 59,000, around that level, right? I've said bull market continues. And look at this range here. Don't make this up. 24 to 21, bear market. But look at this line here. Last line of support, 618, 27K. And I just showed you this a little while ago. Just here, look, 27K. You see what I mean? So I'm not doing this and that. I did that already. I did this already. This is on all the videos you can see. So that's what's going on. So yeah, other than that, guys, like, share, subscribe. Don't panic. Let's see what happens ultimately this week. And this is good. Like, we needed this. Trust me, we absolutely needed this correction. Because if we didn't, then the thing that happens, we get stopped. We won't know where we're going anymore. You know what I mean? We get confused here. We don't know whether we're going up or down. Now that we're here, we reset. Now we know if we're going up or down. Do you know what I mean? This gives us a confirmation whether we want to move up or down, and a lovely little correction is always a good thing for us, and we need these breathers. So yeah, other than that, guys, like, share, subscribe, and I'll catch you on another one very, very soon. Well, tomorrow, basically. I'll do another live stream tomorrow, but make sure subscribe, like, and share with another if you find value. And also thank you very much to all the new subscribers, all the people that are liking the videos. You guys are awesome, and I want to say big thank you to some of the members as well. They've been here all along. I mean, you guys are awesome supporting the channel. It does really help. I appreciate that, and I think I need to start doing a lot more for the members, and I am thinking about a few bits and bobs, so we're going to do some crazy stuff together at some point. But yeah, I mean, guys, you are awesome. Keep up the good work. Be calm, be patient, don't FOMO, don't FOMO, and yeah, try and avoid as many shit coins as possible. Also one other thing I want to quickly add on as well. So last night I had a bust out with Binance. And I've now decided that I'm going to basically leave Binance for good. So I'll talk about this on tomorrow's video, exactly what happened and how I reacted and how I ended up showing them a middle finger. So I'll talk tomorrow. Other than that, guys, like, share, subscribe, and I'll catch you on another one very soon. Adios, my amigos. It's been a pleasure doing this show for you, and I hope you find everything informative and helpful for you. Take care. Bye-bye.